Well, hello and welcome to this edition of the 2023 Investor Insight Series. My name is Todd Federman, and I'm the Managing Director of North Coast Ventures. For those of you not familiar with North Coast, we're a Cleveland-based venture firm with over 450 individual investors that backs early-stage technology startups. Before we begin, I'd like to thank our sponsor, the Center for Health Fairs. The center was the nation's first regional hospital association and today represents 39 healthcare member organizations in Northeast Ohio. The center also includes Champs Group Purchasing and the Essentials Group, which serve more than 20,000 commercial businesses, nonprofits, and healthcare providers across the nation. Tonight's topic is Insurtech, where we are and where we're going. As a B2B focused fund, we see a large share of Insurtech startups, and we've seen increasing numbers of this type of business across our portfolio. The pace is picking up, and it's increasingly important for us to understand the direction of this industry. It feels like we're in a best of times and worst of times moment. On one hand, Insurtech startups are able to develop and deliver more powerful solutions than ever, and generative AI is a real difference maker. On the other hand, the insurance industry right now is in a very challenging position, a perfect storm of sorts, impacted by interest rates, inflation, supply chain issues and costs, and the specter of climate change increasing losses. Over the course of this conversation, we'll have a candid dialogue with an investor, a founder who's currently running a company in the North Coast portfolio, and a thought leader in the Insurtech space. My sincere thanks to our panel, Sue Tyler, Bill Connors, and Andrew Daniels. And with that, let's have each panelist briefly introduce themselves, and then we'll dive into what I know will be a great discussion. Sue?
Yeah, so first off, I'm a proud member of North Coast Ventures, and I'm a venture partner with Caduceus Capital. I currently serve on the boards of several early-stage growth companies, including Beam Benefits and ForMotiv. My career in insurance goes back so far that I was part of what had to be one of the first digital transformations in the industry. I was a product manager at Progressive in the early 1990s when we introduced online quoting and applications using dial-up modem. So I went across the country for several months in agents' office, crawling under the desk, plugging into the phone jack, and installing software from floppy disks. And in some cases, teaching people how to use their computers. After Progressive, I was with a high-growth startup that was ultimately acquired by Farmers Insurance. And more recently, I served as CFO and EVP of Operations and Chief Experience Officer of Medical Mutual.
Excellent. Bill?
It's a tough act to follow. My name's Bill Connors. I'm the CEO of ForMotiv. ForMotiv is a behavioral analytics company founded in 2018 that helps insurance carriers reduce fraud and premium leakage while improving conversion rates. We've built solutions in underwriting, fraud, marketing, and data science, and we're working with leading carriers in auto, home, small commercial, and life. Across our customer base, we're seeing well over 1 billion point-of-sale insurance transactions per year.
Excellent. And Andrew?
Hi, I'm Andrew Daniels, founder of Insuretech Ohio, a community focused on insurance innovation, and Crashbay, an Insurtech startup building the collision repair marketplace. I spent the early part of my career at Allstate Insurance on the claims innovation side of things, working to build out different platforms within the organization, and then spent the latter part of my career working with early stage startups and creating an ecosystem in the insurance technology space.
Terrific. Well, thank you, Andrew. The first question we'll get started with, I'll ask each of you to answer it, then we'll have some more specifically directed questions. But I shared a bit about my perception of the state of the Insurtech space in the introductory comments. But having people here who live in that space every day, I'd love to give each of you a brief opportunity just to talk to us about the current dynamics in and around Insurtech. Sue?
Yeah, so with Insurtech, obviously the overall industry, the insurance industry is struggling under so many different issues. And on one end, you have these large, mature companies with legacy systems. They have capital. And on the other end, you have these small, innovative companies that don't have capital, but have some great technology or some new creative ideas. And I think the challenge is how to get these two to work constructively together, right? Because you have folks that are traditionally slow moving, long sales cycle, and you have hungry young companies trying to do business with them.
Thanks, Sue. Bill?
For us, we're really excited. Given what's happened in insurance and capital markets over the past 24 months, we think this is a time where great companies who solve really big problems in insurance and build sustainable businesses ultimately win. What we've noticed a major change from the carriers that we work with on a day-to-day basis from grow 12 months ago to now solely focused on profitability and risk, in some cases actually shrinking their books of business on purpose. If you said that 24 months ago, you would have thought that carrier was crazy. I was actually talking to a carrier today who said it took 3 years. It just got approved to get updated homeowners pricing changed. So now they can more aggressively go after market share. So overall, again, it's a great time for companies who are solving really big problems if you're selling into insurance, and then for the insurtechs who are maybe taking risk on their own books, or MGAs who have great unit economics and are building great businesses.
Thank you. And Andrew?
Yeah, just to add, what Sue and Bill had mentioned, there's lots going on in the space. I think that's good news for everyone involved. I think that we've kind of seen the first wave of technology and innovation come through the industry, and hopefully we'll get into this a little bit later too. There were those early adopters from the carrier perspective, and those from the startup perspective who benefited from that. But the second wave that's coming in, this 2.0, Insurtech 2.0, is really interesting. Like, I think a lot of people learned a lot from the initial stage, and a lot of more carriers are getting involved, and they've kind of learned their lessons throughout the last years. And there's renewed sense of interest in things that are going on. And I think the second part to it is why it's really interesting time for this space, is that the technology or the problems that still need to be solved, they aren't overly complex in some ways. I think a lot of it is around adoption problems of those technologies. So we don't need these highly technical things right now. We need new models, or we need a simpler way for it to be onboarded into a carrier system. So lots going on there.
Absolutely. Okay, well, Sue, let's shift to you as a former insurance executive and a current Insurtech investor. What lens do you use when assessing opportunities broadly across Insurtech?
So, Todd, I think it's the same as any industry. You're looking for a large market, compelling value proposition, competitive advantage, product market fit, a great team that can adapt to what they learn about the market and their customer needs. But one of the things I think that's really different about the insurance market is these companies are dealing in a very regulated industry. So, while the governance of and regulation of AI generally is in its infancy, in the insurance industry, the NAIC came out with a draft model bulletin on the use of AI in insurance this past summer. So it encourages insurers to develop a written program for the use of AI systems. And I bring that up just because I wanted to make sure that the companies that you invest in are aware of the regulatory environment, and they're also aware of statutory capital requirements if they decide that their model is going to be one that bears risk. I've seen a number of companies that started out thinking they would be an insurance company or a risk-bearing entity, and then they pivoted because they realized that that raising statutory capital isn't easy, because statutory capital is basically money that you need to tuck away in a bank account, and that can't be used for operations. So I think that a lot of them have pivoted to providing models that would serve existing insurers who have those licenses, have the statutory capital, and instead of doing it themselves.
When given a choice between being in a regulatory environment and not being in a regulatory environment, for most, the choice is clear. So, Bill, let's talk artificial intelligence a bit. Pre-large language models, AI was already impacting some aspects of claims, underwriting, fraud detection. But post LLMs, it seems like we're really off to the races here. Can you tell us a bit about how you and ForMotiv are using AI in your core solution today?
Yeah, for us, we're using more machine learning, to be honest. Eventually, we'll definitely get to AI, and we're doing some semblance of that now. But we're using it to analyze the digital behavior of consumers or agents. So really looking at how they're filling out point of sale applications and how does that tie into fraud, profitability, and risk. We certainly see the benefit of all of those transactions that we've now captured and have been able to improve our products and solutions as we've collected more data. I think AI as a whole in insurance is really interesting. There's a lot of hype. Sue just mentioned this, but in underwriting, it's hard given the regulatory environment around pricing, making underwriting decisions, and ultimately driving adverse action taken by the carrier. The challenge with the AI and underwriting specifically, at least right now, is just the explainability. Whereas I think, and we're seeing with our customers, there's a lot more traction around claims and fraud as carriers are trying to automate and create a no-touch claims environment, remove friction and remove humans from that process. It's already having a big impact. And then with fraud, there's just so much data and so many different ways to look at it. You need tools that can process billions of data points to augment the onesie, twosie human analysis by SIU teams.
Great. And then, Andrew, you sit in a really interesting seat at Insuretech Ohio because in addition to the hundreds of startups you engage with, there's some very large legacy players in Ohio which partially create the environment for those smaller players, players like Progressive and Nationwide. So can you give us a sense of how some of these more entrenched traditional insurance companies are responding to the rise of Insurtech? Are they seeing them as partners, competitors, or both?
Yeah, it's a very good question. I kind of alluded a little bit to it, a little bit earlier in the conversation. I think there's a couple different buckets that we look at these companies and where they've sat from the carrier perspective. There's those who have really embraced it from the start and got ahead of it 8, 9, 10 years ago and started to do some really interesting things. They employed different models. They set up their own investment firms who had kind of a different or alternative view on what types of things they would invest in. And I think we've seen those, strategies start to pay off over time. If they were able to understand the disruption that was coming and understand that maybe they would have to take a bet on a company that was maybe a competitor to theirs or had a different way of doing things in the beginning, that is something that, kind of paid off in the marketplace. I think for most of the companies, they're kind of getting to from the carrier perspective, they're getting to this more mature stage where they've gone through the scouting type phase one of looking at insurtech startups and having a lot of conversations. And, coming from the startup side too, that's, not always the best thing, right? But they're, from the carrier side, like they're learning, they're getting more complex in their thinking, and it's a great way to understand what's coming next. And I think those companies are starting to move to this phase where now they're starting to be able to understand how to adopt faster, and they're putting programs and positions inside the organization that can help them do that. And then the third bucket is those who have kind of been on the outside looking in. So they're still very much in the scout mode, having conversations. But I think they've also had an advantage, right? Like they've gotten to learn from the other two groups as they've gone through the stages, and I think they come out a little bit smarter, but maybe further behind in actually employing a lot of that technology and figuring out the back end of how do I get this integrated into my system? What type of internal teams do I need to actually have this in place and make an impact on my business?
Very good.
Can I just chime in? I think there's some really cool collaborations going on now, whether on the health side, it's between payers and providers, whether it's these corporate venture arms that are working with smaller business, inside out innovation, or consortium investing. You're seeing, groups of insurers pool their money to invest in a new technology or a new company. Same thing on the payer side of things, as well as the health companies. So I think what's really neat is the way people are working together in new ways to solve some of the old problems.
And I'll tag on. I'd say as someone who's selling into insurance and talking to insurance carriers every day, innovation teams 3 years ago did not have the leeway or the internal rapport that they have now. We've been helped a number of different times with some of our longest term, most loyal customers were introduced and ultimately brought in by those innovation and corporate venture capital arms as an introduction to a business line where we were solving a problem that they knew existed internally.
Great. Well, Sue, with some of the dynamics that the three of you just addressed from the perspective of the large carriers, when you put on the hat of Insurtech, what are some of the challenges they have around adoption, scale, and working with these larger players?
So I think, one of the things you just mentioned is scale. So a smaller company working with a larger company, if it's a new product line, you're now extending it out through a large sales organization, or whether it's applying a technology across a large book of business. So the ability to scale, the compliance is a huge issue. I'm going to be a broken record on the regulatory environment that insurance deals with, but there's huge consequences if something goes bump in the night, both from a regulatory perspective, a legislative perspective. Plus, insurance tends to be, a point of interest for politicians and the press alike. So I think there are a lot of consequences when a large company tries something new and different and risky.
So, Andrew, let's take a moment and talk about the consumers. Today's consumers are very different than those of 20 years ago. Many of them have grown up with digital devices, and they have more of a digital savvy and a different level of expectation of what it's like to engage with and how and where they might engage with an insurance company, whether they're buying home, auto, life, or other types of coverages. What's your take on how this emerging consumer behavior and expectations has shifted within the insurtech industry?
Yeah, I think it's really a topic that just, I guess it's a negative comment or approach to it is like, we still haven't caught up, right? So I believe that the technology we're adopting now is stuff that um, you know 4 or 5 years ago was mainstream and should have been adopted at that point. So we're continuously playing catch up, and I think this idea of the customer expectations, customer experience has a long way to go. And I believe that's because a lot of the early technology that was coming into play was really helping, obviously, on the operating side of the insurance carrier and being a cost savings to the business. And it was always a good thing that, hey, it could also help us from the digital customer experience standpoint as well. But that's not really what's driving our decision. And I think until the industry really flips that on its head and says, well, we're still 4 years behind. We have to catch up to now. We have to do something more drastic and adopt something maybe that doesn't have that initial business value, but 2 and 3 years down the road will pay dividends for introducing that type of technology a little bit earlier in the game. And I think it's like you just have to keep up. Like tomorrow it's going to change, and unless you're ahead of this, you're going to always be behind.
Okay.
One thing to just quickly add is I do think something that gets lost in this is that insurance products are by their nature very complex. So if you looked at 3-4 years ago, everyone thought that life insurance was going to be sold D2C and that was the next wave. That really hasn't come to fruition. A lot of the insurtechs that raised a lot of capital have now pivoted, in some cases, to even selling the platforms that they've built to the incumbent. So I think that an omni-channel approach is really important, because even me, who knows as much of insurance as Sue forgets in a day, I wanted to, when I opened 2 different term life policies, I wanted to speak to someone on the phone. And I've been working in insurance or selling into insurance for over a decade. So I think the complexity comes in, and having a really good omni-channel strategy is critical for some of these products.
And Bill, just to stay with that for a moment, as we think about complexity and just how different use cases and technologies are leveraged different at different large players, maybe give us a sense of just the breadth of how ForMotiv is used, and what really separates those clients that are most successful implementing a new technology like yours?
Yeah, I mentioned how we're working cross product. I would say at its simplest, the carrier has a digital point of sale process. It's not paper based. That can be agent or direct to consumer or omni channel, as I just mentioned. They also have accelerated and instant underwriting decision practices. So if you open an insurance policy for a car, whether you're speaking to an agent or going online, you're going to get a decision almost immediately. And then in the life space, decisions coming within 24 hours. That 2 week cycle to get approved no longer exists. I'd say the success that we see with carriers as well is they value data. Organizationally, they're willing to take risks. They actually incentivize internally to work with new vendors. And then for us, we want to work with those types of forward thinking carriers who want to solve big problems in underwriting, in fraud. And lastly, they're collaborative. Our most successful customers and partnerships, I should say, have a vested interest in success because they know we can help them solve really big problems. So they're willing to share data with us, share learnings. So there's a lot of back and forth and collaboration, which is exciting.
Great. And Sue, I'll ask you to take us into the boardroom for a moment here because you're on a handful of boards. You're in those rooms with founders, technologists, venture capital partners, and probably some insurance executives in those independent seats. So I'm curious, what are some of the dynamics you're seeing in the boardroom today in and around Insurtech? What's the hot topic or concern, if you can generalize?
So I would say, like any board, you're always worried about strategy. You're worried about having the right people, your ability to scale. But what's changed probably in the last year or two is the refocus on capital efficiency and a path to profitability. So, a few years ago, everybody was grow, grow, grow. And now with capital so much harder to come by and valuations down, the focus now is really more on margins and cash. How do you reduce your cash burn without reducing your long-term value, right? So you're got this delicate balance of you want to keep investing in the things that are going to set you up for the long term, at the same time while being frugal on things that you don't have to spend today. So there have been, reductions in force at a lot of different companies over the past year or two, which are always tough. Other topics, I mean, partly, as much as I hate to say it, an industry that's suffering from duress or external conditions, it creates a burning platform for innovation. So in some ways, it does provide an opportunity. So, trying to make sure that the company focuses on those big problems that have C-suite attention, at their potential customers or partners, making sure that you have the right people in place, that you have the what you need to be able to scale successfully. And then lastly, since it's a tech business and insurance is largely a data business with all the regulatory, whether it's the normal insurance regulatory environment, HIPAA, privacy, data security and privacy is also a more frequent topic in the boardroom today.
Great. And Andrew, I'd love for you to help us dig a little deeper on one of the points that Sue just made. And broadly, that in an industry like insurance, which is under duress, there are a lot of burning opportunities for innovation and improvement. And I'm curious, as you talk to so many startups and big companies, what do you see as some of the biggest pain points in the insurance industry that technology can address?
Yeah, I think there's two in my mind. The first is communication. So, how we're talking to policyholders, or honestly, like anyone within the ecosystem, in the insurance ecosystem, and how we help them access information. Kind of that self-serve model. I think there's a lot of things that can still be done in that space that can really solve some big pain points, both on the carrier side and on the consumer side of things. And I think the second is choice. So Bill had mentioned this earlier about the omni-channel approach, and I think the first wave kind of coming in and doing that direct-to-consumer approach, very focused on a brand and in distribution, and that model has kind of lent itself to this approach where there's so many channels we can engage with, from a distribution channel, from a communication channel. And we really want to create that, not only that seamless, streamlined experience, either on the claim side or on the buying side, but we want to help consumers feel like they're almost choosing their own adventure, right? But still giving the things to the business that we need for the business, and that's part of the things that we're doing at Crashbay as well. It's hyper focused on how do we give consumers that self-service kind of aspect to their claims repair, and how do we help them feel like this is a lot of their choice while still giving a lot of benefits to the operational side of the claims organization.
All right, so Bill, we'll take it from here. So Andrew laid out some of the opportunities, but I'm curious what advice you'd have for founders today who are looking to build companies, secure funding, and build partnerships in InsureTech.
Yeah, great question. For funding, I think one of the big things that gets missed outside of your standard, you're addressing a big market and those other things, is to find tangible ROI with the customers that you're working with, and have customers that rave not only about your product and the solution that you're offering, but also how you service them. When it comes to partnerships and just embedding yourselves further into the ecosystem, I think there's two things. One, you need to learn the insurance space cold, know the verbiage, the problems carriers are facing, the macro trends, how your product can help solve those problems, and know the landscape and technology market. And then with that, you want to have some sense of the high level regulatory environment. And hey, if I'm suggesting a carrier do something, does that have impact on how the carrier is pricing a product in a particular state? Or in life insurance, you can't just change your questions every day and take an e-commerce type of approach, because you need to get those questions regulated by the state. So if you walk in the room suggesting things that they can't necessarily do, you lose credibility almost immediately. So again, that one comes back to know the insurance space cold, or the best that you can. And then the other I'd say is you need to outlast the competition. You have to keep telling your story, the value prop that you provide over and over and over again. It certainly will feel redundant, but the compounding impact of that is ultimately what wins accounts and what builds success. It's your classic, everything happens gradually and really suddenly, and then all at once. And we've certainly felt that by now being in insurance for almost 6 years and talking to a lot of the same companies for that entire time frame.
It's great advice. So, Sue, you touched on healthcare earlier and wondered if you could take a moment and just talk about some of the trends in healthcare that are impacting InsureTech opportunities and startups.
Yeah, I guess not really specific to healthcare, but you think about new distribution and customer acquisition models, different places to purchase your insurance. It's probably 40, 50 years ago when people, to Bill's point earlier, said people are going to stop going to agents. Well, people still go to agents, but there are new models. There are embedded insurance, insurance products that are embedded in other purchases, whether they're mortgage or auto purchases or product purchases. So I think there's new models there. There's new product designs. There's on-demand insurance in the health insurance area, new risk-sharing models and capacity. There's, companies out there that are providing, fronting paper for people that do choose to take risk, as well as reinsurance on the back end, so that a new entrant can more easily get into the market. All these new techs like AI that, you're applying new tech to the same problems that we were facing in the industry probably 25 or 30 years ago. The problems haven't changed, but the ability to address them in exciting new ways is very different. And I think, to my earlier point on collaboration, I think there are a lot of different partners that are working together in ways that we would have thought unimaginable years ago. Health systems that were competitors now, collaborating on solutions, payers and providers, risk being shared, with new entities, whether that's the provider side of the house, or, folks that are involved in other functions or other companies within the larger insurance ecosystem. So I just think there's a lot going on, a lot of trends that we can come into. And again, I do think that the current status of both the health and the P&C industry, it really creates an imperative for innovation and for trying to do things differently. So, as distressing as it is, it's also really, really exciting, right? Because, changes come during tough times.
Absolutely. So, Andrew, I'll ask you to comment on IoT and connected devices. As individuals, most of us have multiple devices on us at all times, some with accelerometers, heart rate monitors, pulse ox, you name it. And most vehicles now have a bevy of sensors across all major areas. So, what innovations are these IoT and connected devices having on Insuretech?
Yeah, well, I think the first one is in the auto space. All these sensors are just really expensive for the claims department. So
Mm.
when they don't help you, you get out of that accident's path. But I think it's been look, this topic has been a tough one for the industry to solve and to understand how to fully figure these things out. Obviously, it's been from that first phase of Insurtech. People have been trying different models in the IoT space, and obviously, that we know, in theory, that data helps with underwriting and mitigating claims costs and those types of things. But it obviously takes time to prove that out, and it was a race to figure out how you could push these claims mitigation or risk mitigation devices down to your policyholders without losing so much money on the purchase of each one. So I think Sue had mentioned in the last question around partnerships and those types of things, and I think that's what we've seen it transition to. Is like there are those who are really good in alternate segments of the market at getting these devices to people. And those partnerships between those device companies and the carriers is what has kind of helped excel this and kind of bring it into its current stage.
Okay. And Andrew, we'll stay with you for a moment here. You're in Columbus now. And can you just share some examples of the types of companies being built there in and around InsureTech and what you're seeing from this concentrated area of activity, which feels to be as focused as any technology concentration area I've seen in the Midwest?
Yeah, well, I think back to the other point about IoT too. I mean, some of and the B2C point that we talked about earlier, some of those earliest companies that were getting funding in this space were built here in Columbus. An example with Sue and Beam, and I think that has kind of spurred on these next wave of InsurTech startups in the area. And as the talent from those organizations start to get ideas and they start to move on to other things, I think that's what has helped us kind of build the ecosystem that we have here. And I challenge people across the country, because a lot of our InsurTech network is actually outside looking in from an Insurtech Ohio perspective. I think over 60% is an outside audience trying to catch up with the things that we're doing here in Ohio and in Columbus. And I challenge them to think of another place where you can walk down the road right here and run into, I would say 6 or 7 startups within a 5-minute walk in the InsurTech space. And, they struggle to do that. And I think that talent, and I think obviously having the carrier base here, who are possible sales targets or feeders of new ideas, absolutely helps us.
Yeah, just piling on how big insurance is to Ohio. I'm a very proud Progressive alumni, right? Or alumnus. But Progressive was very innovative for the size of the company that it was. And there are so many people that have their roots at Progressive that are now out innovating at other large carriers or at startups. I think you really do, once you get an industry concentration and success, that it begets more success. And those folks, spread their wings and fly and build more great companies based on that common root at Progressive or some of the Columbus companies.
That's great. And Sue, some of those companies spreading their wings are working with and helping and becoming a valuable asset to larger traditional insurance carriers, and others are trying to disrupt them. Do you have thoughts or advice for those companies that are trying to disrupt the insurance industry for how they should best approach the opportunity?
Yeah, I think those that are trying to disrupt it, the two cautions I would give them if they're trying to go it alone as an insurer themselves is, again, back to the subject matter expertise. It is a very complex industry. Back to the regulatory oversight, the political, legislative, and social implications and scrutiny on the insurance industry, is understanding if they are going to be a carrier, that they have the statutory capital that they need to support the risk that they're bearing, and that they have the requisite subject matter expertise. I've seen a number of them start down that road, full of great ideas, but lacking, I guess, an appreciation for the complexity and the skills and the expertise. Great things happen when you have fresh eyeballs and new ideas that are brought together with that subject matter expertise, whether it's in the form of a co-founder, an advisor, board members. But those that are trying to disrupt it, starting digital first, I mean, there is a great opportunity to start without the legacy systems that most of the insurance industry is saddled with. And I hate to use the word legacy as it relies to people too, but to some extent, starting fresh does create opportunities that you don't necessarily have within a large, mature organization.
Very good. Well, this has been a terrific conversation. I have one final question I'd love to ask each of you, starting with Bill here. Not sure if you brought your crystal ball here or not, but I'd like to ask each of you for a prediction on what lies ahead in Insurtech for the next several years. Bold prediction or a not so bold prediction, but would love to better understand what you see coming.
Yeah, I think within Insurtech, I think some of those carriers or companies that tried to be carriers, you're going to see continue to see consolidation, and you'll continue to see those who have the good unit economics and are seeing their combined ratios drop are ultimately going to win. And then from a macro perspective, I think in the relative near term, you're going to see carriers start to aggressively try and gain market share. Rates have been approved in a number of different states for a lot of different carriers. So while over the previous 12 months, even longer, carriers have shrunk their book, I think you're going to see return for some of the leaders in the space back to growth mode, which is really exciting for Insurtech overall.
Andrew, your take?
Yeah, I think I feel very strongly that now is the time for Insurtech. I think we've just been building up to right now to this moment, and over the next 2 to 3 years, this is our time to shine. I think we're following the path of the fintech space, and we're a few years behind, and the opportunity lies right now. I think to highlight that we're starting to see founders from outside of the industry get really interested about solving problems within the insurance industry. And I think that has been the tipping point for this new, optimistic outlook on the next 2 to 3 years. I think it means that there is real opportunity and that there's going to be some new, fresh ideas coming into play with technologies that the insurance industry hasn't seen yet. And that's really exciting.
And Sue, bring us home.
Yeah, Todd, I don't have anything really profound. I'd just say, the folks that are going to win are the folks that are marrying the discipline of the existing industry with the innovative new ideas. They're going after the big problems, the things that align with the strategic objectives of the C-suite and are grounded in deep subject matter expertise. Because that, again, is one thing in some ways I admire about the Insurtechs. They're free of the baggage of the industry, but on the other hand, those that don't have enough of it, I see several of them failing or having to retrench and start down a new path.
No, that's terrific. The future is never clear, and it seems in and around Insurtech that there have been many winners and many that haven't gotten there. But I know as a frequent investor in Insurtech, it's an area that we remain excited about, and we're hopeful to keep backing startups here in the future. But with that, I'll just thank Sue, Bill, and Andrew. Really appreciate your joining us for the Investor Insight series tonight. It was a great opportunity to hear your perspective on the Insurtech industry. And special thanks to the Center for Health Affairs for sponsoring this session. Thanks again.